you can have the perfect trading strategy. The sharpest chart analysis, the fastest execution speed, and still lose everything. Not because the market turned against you, not because your system stopped working, but because you didn't protect the one thing that matters most in this game: your capital, your lifeblood as a trader. I remember meeting Daniel in 2017. He wasn't just any trader. He was the guy everyone in the local trading circle talked about. He had an instinct for market moves that felt almost supernatural. If gold spiked, he was already long. If EUR/USD dropped, he was short before the rest of us even noticed the setup. But here's the thing. Daniel was reckless. He didn't believe in position sizing. He didn't believe in stop losses. His philosophy? When I'm right, I'll make a fortune. When I'm wrong, I'll just wait until I'm right again. It worked for a while, until one day a sudden central bank announcement hit. The market moved against him in seconds. Not minutes, not hours, seconds. His account, the one he had been building for years, evaporated in less time than it takes to make coffee. All because he risked too much on a single trade. Capital management isn't exciting. It's not as glamorous as posting a screenshot of a 300% return trade on Instagram. It doesn't get applause in a trading group. But you know what it does get you? Survival. The chance to stay in the game long enough to let your edge play out. Let me tell you about Sarah. Sarah started with just $2,000. She didn't care that it wasn't much. Her goal was never to flip it into $20,000 in a month. She focused on the math of risk. She risked only 1% per trade, $20. That meant she could take many trades without blowing up. At first, her growth was painfully slow. Friends laughed. Some even told her, "You'll never get rich that way." But month after month, year after year, she kept compounding. By the third year, she wasn't trading with $2,000 anymore. She was trading with $50,000. Not from a big win, but from 1,000 small wins and the discipline to protect her capital. And here's the kicker, she's still trading today. While most of the big win traders she started with, gone. Accounts wiped. So why is capital management so hard for most traders? Because it feels like the opposite of what you want to do. You see a perfect setup. It feels so right. You want to bet big. And maybe it works once, maybe twice. But the third time, the market humbles you. And when you've bet too much, the loss doesn't just hurt, it ends your career. Risking 1 to 2% per trade feels boring. It feels slow. But slow is the path to survival. And survival is the only way to get to consistency. Let's break it down into the mindset side of things. When you risk small, you give your brain room to think clearly. You can analyze without panic. You can hold through normal market noise. When you risk too much, every tick against you feels like a threat. Your brain switches into fight or flight mode. You stop trading your plan and start trading your fear. And here's the dark truth. If you blow up your account, you don't just lose money. You lose time. You lose the compounding effect. You lose the confidence you worked so hard to build. One of the best capital management principles I've ever learned came from an old pit trader named Robert. He told me, "Kid, think of your account like a fortress. Your trades are soldiers. Never send all your soldiers into battle at once. You always need reserves." What he meant was simple. If you keep your position size small, even when the market catches you off guard, you live to fight another day. And here's the magic. When you survive long enough, the probability starts to tilt in your favor. Because your edge plays out over hundreds of trades, not just one or two. Some traders use fixed percentage risk. Others use volatility-based position sizing. Some even scale in and out of trades. But the principle stays the same. Never risk so much that a losing streak wipes you out. In my own trading, I have a simple rule. If I lose 3 trades in a row, I cut my position size in half. It's my way of putting the brakes on before the damage gets serious. Because the truth is, the market doesn't care about your feelings. It doesn't care if you need to make back your losses. It will chew you up if you get emotional with your capital. There's another reason capital management is critical, the psychological side of recovery. Let's say you lose 50% of your account. To get back to break even, you need a 100% return. That's not just a math problem. It's a mental problem. The pressure to double your account will make you take risks you normally wouldn't. And that's when the spiral begins. The way out? Never let yourself get that deep in the hole in the first place. I know what you might be thinking. Okay, but what about the people who went all in and made a fortune? Yes, they exist. They're rare. And you usually only hear about the ones who survived, not the hundreds who didn't. For every trader who turned $1,000 into $100,000 in a month, there are thousands who turned $1,000 into $0 in a week. That's the story no one posts on social media. Capital management is like a seatbelt. You don't wear it because you expect to crash. You wear it because if you crash, you want to walk away alive. In trading, every day is a drive on a road where accidents can happen at any second. The seatbelt is your position sizing, your stop loss, your risk control. You don't trade without it. The great irony? When you master capital management, you stop chasing home runs. You focus on getting on base. Trade after trade. Small wins, controlled losses. Over time, your account grows steadily. And one day, you look back and realize you've done what most traders never will. You've lasted. So here's my challenge to you. Before you take your next trade, ask yourself, how much am I willing to lose on this trade without it affecting my ability to trade tomorrow? If the answer is more than 2%, lower it. Protect your fortress. Because in the end, the traders who survive are not the ones who make the most in one trade. They're the ones who make sure they can always take the next trade.